These two lines you see on my chart is the simple moving averages. They are one of the simplest and most effective indicators out there. They are simply showing the average price of some particular point. For example, this green one is the 20 simple moving average, and this shows us the average price of the last 20 candlestick out here. So it dynamically shows us the average price of last 20 candlestick. And the 200 simple moving average shows us the average price of last 200 bars or candlesticks. So I have been watching these simple moving averages for the last year, maybe even more. Yeah, I was probably looking at them for the last 2 years. And I have been observing these moving averages every single day. I saw more than hundreds, maybe thousands of examples. How did they play out and how didn't they play out? And I have been using them for my trading ever since. They are multi-purpose indicators. They can be utilized in several different ways, and today I am going to show you some of them. I have watched some moving average videos, and I saw that people were talking about the crossovers and the dynamic support and resistance levels, and some videos even were mentioning the slope of the moving average, which I believe one of the most important concept. And I saw many other ways how to use these moving averages, but I didn't see any information about the how the moving averages look when the price action is choppy. And I believe this is one of the greatest ways to use them. I mean, when price is trending, the moving averages get away from each other. They start to expand away from each other, and price would be a certain side of the moving averages. For example, over here there is a bullish crossover. Some call it golden cross. After the bullish crossover, both moving averages starts to expand higher. I mean, if you imagine an arrow in the tip of the moving average, then you can see that the moving average is looking above. It is going above. It has got trends just like price has. Because why? This is the average of the price itself. So you see that moving averages are pointing an uptrend, and price has been going higher as well, and price has been above this 200 simple moving average, right? And after these two starts to expand away from each other, price is in an expansion mode, and price stays inside of that expansion mode until it takes out some liquidity levels and then reverses back lower. But let's see what happens when the moving averages are crossing each other back and forth like this over here, and try to see how price behaves when these two are really close to each other and price are stuck between them, right? These are the conditions that I am really careful about, and that I am trying to avoid taking trades because I struggle trading this kind of consolidations and I am better trading at trends or continuations. Let me show you some examples on the lower time frames. If you look here, you can see that especially in this area, price is really stuck between them, and inside of here, trying to get a continuation setup is much more difficult. But after these two are getting away from each other, it is much more simpler to enter this downtrend over here. Because as we can see here, price is clearly going lower with some momentum behind it. We can see this multiple imbalances, right? So as we look at the moving averages, both pointing downwards. If we imagine an arrow at the tip of the moving averages, we can clearly see that both showing downwards. And if we check this relationship between the moving averages, we can clearly see that they are expanding away from each other. These arrows are just my indicators. They are just something that I use to get an idea. This is normal moving average indicator and this is my indicator. My indicator just puts this arrow to give me some ideas, so you can ignore that as well. This is the original moving average, and if we look carefully, we can see that they might be starting a trend. And if we check the price itself, we see that price seems like it is leaving the bigger consolidation area over here, and it already left this consolidation area with multiple imbalances, right? If you haven't seen my videos about the market structure and how to utilize market structure by observing these kind of consolidation areas and observing how price leaves the areas away. In my perspective, a market structure break is not just a break of a particular high or low. A breakout for me is just price leaving some area. This is a price area and price leaves the area. And when I use moving averages to utilize, I can see that right starts of the new trends, right? I didn't catch a reversal setup because the reversal might have occurred over here after this high was swept, or maybe the reversal was here. I'm not really interested in catching the reversal itself because I don't want to sit inside of this consolidation. So instead of that reversal, I would rather wait for the reversal to happen and then join this kind of consolidations. And we have the bullish examples as well over here. As we can see, price has been dropping lower and respecting the moving averages, especially the 200 simple moving average, and keep expanding lower. And then price starts consolidating and our 20 simple moving average starts to look higher. When this is looking higher, I am more cautious about taking short setups. Why? Because I am a scalper or intraday trader, so I would rather be in line with the order flow itself. I mean, if the order flow is grinding higher, then I don't want to try to get a short setup, even if the higher time frame or the longer time frame of this order flow is already bearish. Because why? I use tight stop losses. I follow the price. So over here, I didn't take any short setups and I just watched this consolidation happen. And I didn't consider that price closing below this simple moving averages, but I didn't consider that as a break below. Because why? the moving average was looking above. So then I saw that price tested this 200 simple moving average today once again. This was the test during the news, and this was the second one. So when I saw that price is testing this level once again, I didn't treat this as a bearish expansion. I rather preferred waiting for this consolidation area to be left away. If price left this area away, then I could start looking at short setups. But price didn't do that, and price turned back higher and closed above this high over here and 200 simple moving average. Then price started to use this 200 simple moving average as a dynamic support level. So this dynamic resistance level turned into a dynamic support level, and that was a great indication for me to understand or to expect that price might be willing to take out this news release high over here. So the low of the news release was already taken, and during the New York Open, price already took this low over here, the pre-session low, and then price created this consolidation area, and then price turned back higher. As you can see here, I am not watching these lines blindly. I'm not making any bets without the context of the price. So I watch this context, and I watch that price is tapping over here. Then I opened my first position, first long over here, and I took my profits near this high. You can see that trade in the live this day's March 6 Friday live session. Go check it. Go check the recording if you would like to. But let's get back to the subject right now. After that, I was trading with the micro chart, and micro already took this high over here. If you check the micro Nasdaq, you can clearly see that micro Nasdaq took the high, but mini Nasdaq didn't take out this high yet. So I was still expecting this high to be taken, and I watched this pullback right here. I didn't treat this as a bearish reversal because I saw that moving average crossover. I saw that the 20 simple moving average was angled upwards for a while, and I saw that this 200 simple moving average was looking below, and it was starting to look flat, right? It wasn't going down anymore. It was looking flat, and I waited to see if price gets a reaction from this level. And then I saw this reaction. Price expanded back higher, and then price took out this liquidity point, consolidated a little, and turned higher over here and created yet another liquidity point. This was a fractal liquidity sweep. So if you would like to learn more about this fractal liquidity sweep, go check my video. I will add it somewhere around here probably. Let's continue. After that fractal liquidity sweep, I take one long from here. It got stopped out, but it was a low risk long, so I was able to enter again. And this was the next entry point. Above this black candlestick was the second entry, and this was the partial point. And then I took another long setup by utilizing the angle of the 200 simple moving average. As you can see in here, price closed below the 200 simple moving average, and price was already below the 20 simple moving average as well. And we also saw that crossover over here, but when I zoom out, I could see that price was clearly range bound, and during the range bound price actions, price doesn't just keep expanding lower. It likes to go back and forth like this. And I just observed this low as well. Price swept at the low of the consolidation area. So I took a long position from these levels. Then after I saw that price is flipping this, I added to my position. Then I started taking partials from this level, and I eventually exited at this level fully because we are really getting close to the weekend. Price was going to close, and I thought maybe this was it. Price might just keep consolidating, and price didn't consolidate, reversed back lower after my profits, but it doesn't really matter for me. What matters is just the professional execution. So in this video, we talked about the moving averages. We talked about the slope of the moving average. We talked about the moving average as being utilized as a dynamic support and resistance levels. We talked about the crossovers, right? And we talked about how we can get continuation setups after price taps into these levels. Also, we talked about how we can understand where price gets choppy, right? When price, especially when price is inside of these two levels, and how these two levels look when price starts to get expanding. I hope you guys enjoyed this video. Make sure to watch the other two. This was an uncut and raw video. I wish this is all about my experiences, and I wish you guys would enjoy it. I wish that might help you to learn something more. If you guys have any questions, feel free to ask them on comments or maybe on my Twitter account. I will see you on the next one.